Hi, everybody. This is David Skarica. So, sorry there was no stock chart of the day yesterday because I put up our first Patreon and members only video. So I'm going to give you all the links today on Friday. So it's kind of being launched. The videos yesterday, and it's a very intense. It's a very large overview of markets from gold and precious metals, interest rates, stock markets, long shorts that we have. Junior mining stocks to look at for when gold bottoms, hopefully for between now and the end of the year. So I hope you really enjoy it. I think you'll find it's worth your $7. Please, we'll have links. I have a little mission statement I'll post below this video, or a link below this video for those of you who are interested as well. But today we're just going to look at the Japanese yen. Monday we're going to look at, on the weekend we're going to look at copper and how copper has been holding up better than gold, which is kind of interesting. And a deal that we have that looks like a good copper silver kind of play. They're doing a financing right now as well. So today's stock chart of the day is going to be the Japanese bonds and the Japanese yen. So for years, it's been just amazing how Japan has held together, this huge amount of debt that they've racked up. Actually, maybe I'll go look at that after we look at this. But this is interest on the debt in Japan, right? And you can, so this is the 10-year bond. You can see this is now 0.8% might not sound like a lot, but when your debt to GDP is 250%, that starts getting wary. And I think if Japan gets to 1-2%, they're going to have some real issues, especially if they get to 3-4%, forget about it. Now, their central bank does own a lot of the debt, so it becomes almost like a bit of a scam in a way, because, some of that interest is going to go to the central bank and they'll send it right back to the government. So, but still, a lot of the debt obviously is owned by the public, etc., and you have to pay that interest on it. So you can see, really, Japanese debt has stayed under 2% since the 90s. And that's why, and I think that's why people are surprised at what's going on interest rates right now around the world. When we look at US being 4.75, or the UK being 4.54, or Canada's over 4, Italy's almost 5, etc. And the reason I'm saying surprise is that people thought it was going to be like Japan after the financial crisis. They thought what happened in 2008 was like 1990 in Japan. And you can see after that, Japan rates went down essentially from 90 to 98, and then has been, kind of low ever since. So I think people thought, when rates went to 0 over COVID, people thought, it's going to be like Japan. We're never going to go above 2 or 3% for decades. And now here we are 3 years later, and we're pushing, 5% on the 10-year bond. So, but Japan, like I said, because the debt levels are so high, they can't handle these rates. And you can see we're back to, to about 2020 levels in Japan, 10-year bond rates. And, the debt is much higher now than it is in, in 2020. So we're going to go look at government debt to GDP in Japan. And again, if we get the max chart here, you can see in the early 80s, it was under 50%. When they started, it was about just over 50%. And it's gone straight up as if Japan has not dealt with any fiscal problems. You can see, again, in 2000, it was still high in 2012 when rates were this high. It was like 220%, but now it's 260%. So at some point, it's like, when does it actually matter, right? And you can see rates were 2% back in the 90s when it was just over 100%. So again, I think 2 to 3% is probably that, where the Japanese economy can't really deal with it, right? So we're also look at quickly GDP per capita, and this is what happens when you have a highly indebted economy. And you see that GDP per capita since that early 90s, it was 30,000. Now it's 36,000, 20% in 30 years. So that is not a big increase. And again, if you adjust that for inflation, we're gonna, you're talking like, the standard of living in Japan has really been lowered, and you can see the boom here. And then again, when they turn taking, that just shows you that borrowing and spending does not cause prosperity, because the Japanese economy, there's other reasons too. Japan lost a lot of competitiveness when China and India came into the global markets. They have cheaper labor, etc. I think we all remember back in the 80s. I'm old enough to remember as a kid then. All the electronics, your tape cassettes, your CD players, your TVs were all coming from Japan then. Now they all come from China or South Korea or wherever, right? And Japan has lost a lot of that market share. But anyhow, you can see Japan, this is the yen, and you can see this huge decline that's happened since 2020. And we're pushing up against the 2022 lows. And again, part of this is getting the interest rates where, okay, rates are ticking up in Japan, but you're talking Japan, it is 80 basis points. You're getting 500 basis points in the States. So again, and short-term rates in Japan are still zero. So it just shows you that, that's really hurting the yen as well. And you can see this is now getting towards lows, levels not seen since the early 90s. So that sort of helps Japanese exports, because, Japan still makes a lot of cars, autos, some electronics, etc. But we also know the issue with that is Japan, because they don't really have any natural resources. They have to import all their steel and resources to make those things. So, of course, it makes their input costs on that end higher. And we'll go back to the 80s and see the yen. You can see, again, when Japan boomed in the 80s, and even during that 90s period, when they entered that, the yen had this huge move higher. And then you can see, right now we're here. And by the way, if we break this kind of like 98 low, which is basically where the low was last year, there's, I guess, a little bit support of this 1990 low, but I wouldn't be surprised if ultimately the yen goes back to these 80s levels, because again, with the huge amount of debt that they have, they're not running this trade surpluses like they used to. So there's not the money coming into the economy from trade and current account surpluses. I could see Japan, really, really, rolling over, or the yen rolling over. And this might be the place where the first kind of sovereign debt crisis happens. Because like I said, if rates in Japan go to 2-3%, and remember, Japan's been controlling those rates for decades, having that bond under 2% by doing quantitative easing, buying tons of bonds. And remember, Japan has had to roll back the top end of their yield control twice. It went from 25 basis points, then it went to 50, and then they lost control of 50. And now I think they've got it up at like 75, and now we're above 75. So they're going to have to probably move that to 100 basis points, which just shows you when you lose control, you lose control. So actually, and if you want to know, this is how these currencies can affect things. I'll tell you a boring story here, and I'm sure most of you will find it boring, but it's fascinating to me. I was a huge, grew up in the 80s, was born in 77. This is when there are all these Saturday morning cartoons. I know the older crowd probably knows, used to watch Bugs Bunny and the Jetsons and stuff like that. So I used to watch stuff like Transformers, and there was this Japanese animation series. It was called Macross, and they renamed it Robotech for the, it was like kind of like Transformers, like transforming planes and stuff. For years, they've talked about making like a live action movie of it. Seeing how bad the Transformer movies are, I really kind of hope they don't. So I used to love this show. So it came out in like 85, and they had like 3 seasons of it, but they made the seasons all at once. And when they were going to renew the series in like 88, 86, 87, 88, they couldn't do it because the yen had gone up so much. It was costing them too much money to redo the series in Japan, because again, it was way more expensive to do it in Japan, right? And then selling in the series back in the States didn't make the money for the Japanese guys, because the yen had gone up so much. So this is how currencies can affect things. So that was essentially the end of Robotech. It was a guy named Carl Masick. He was a professor in the Dallas-Fort Worth area, and unfortunately, he passed away pretty young, like in his early 60s. So rest in peace, Carl. He gave me a lot of joy in my youth with Robotech. So anyhow, I thought I'd just tell you that little story. I like to throw stuff like that in there. And like I said, it's probably boring to most of you. I think you can watch Robotech on YouTube. So if you want to watch it, it was kind of almost like it had like these almost like soap opera elements to it. It was actually pretty mature for like a kid's cartoon. So anyhow, that's our stock chart of the day. It kind of almost looks to me like the Japanese yen. You flip the 80s upside down. That's where we are now. So the question is, can we hold this kind of support level of like kind of like the 90 to 98 lows, or will some kind of full-blown crisis break out? Now, obviously, at some point, if the US has to start cutting rates and doing their own QE again, that will help the yen. You can see, that helped the yen from, 2009 to 2012. And then again, the yen kind of held up while they were doing that QE after COVID, and US rates were zero. But really, as the US has begun to raise rates and tighten, you can see with Japan not having the ability to tighten because of their huge debt, it really has hurt the yen. So I think this is an amazing chart that show that Japan, how their GDP per capita, how their growth, like if we go like their annual growth rate, let's just quickly look at this. Again, we get a 25-year chart. You can look at it's never, other than spikes after recessions, for the most part, it's been averaging, 1-2%. And if you look at the max chart, again, look in the 80s when Japan was booming. Japan was like basically through all the 80s was consistently growing at 5, 6, 7%, and was already a developed economy. And again, outside of like bouncing back from recessions, Japan is not really growing much more than 2, 3%. It just shows you part of it is a maturing economy. It's tough to grow that fast. And part of it is just the debt load really hit you, right? So actually, this is the one last chart I want to show you. So this is the Japan current chart. This is the current account to GDP. And you can see actually in the mid 2000s, it almost went to zero, which was the lowest in decades. It did bounce back here, but look, it's coming again lower. So this is also negative for their currency short term, because it means less money is essentially coming into their economy. So, and I'm going to leave it at that. And so today's stock chart was the Japanese interest rates, the Japanese yen. And that's something to really watch out for, because if there is some kind of debt or currency crisis in Japan, Japan is one of the largest economies in the world. This isn't like, 1997, the Asian crisis, and it was Thailand. And at the time, they're larger now. But, South Korea and Taiwan were all pretty small economies. We're talking, again, I think Japan is still like the 4th largest economy in the world after the US, Germany, and China. So this would be very detrimental to the global economy.